Hey there, traders, and welcome back for episode number 133 from the StockBandit.tv. I hope that your holiday weekend has been a good one. You've been able to enjoy the Memorial Day break and tend to some other things that are more fun than maybe work or trying to wrestle with this market. It's really been messy of late. So let's take a look at the indices here. That's where our trading week begins, even though this week is a holiday shortened trading week. We've only got 4 sessions, so we've got to make it count. Last week, it was a very interesting week to cap off the month of May. The indices lost, right at 8% across the board for the month. So it's been a really ugly month, especially if you're a bull. And really, a few weeks ago when we saw this rising trend line break, that was our first indication that maybe the trend might be changing. And then especially when we got the good solid breakdown from this multi-week trading range that we had been spending in April, that was another indication. If you didn't get out on this big harsh sell-off here in early May, we did see a pretty good bounce right up to that former support level from that trading range here. We failed at that, and we've been moving lower since then. Now, last week we did see a slight rebound for the market. The indices were up just a little bit, but not a whole lot. And in general, it was a whole lot of noise last week. It was very messy. Let's zoom in here and take a look at the last few sessions. We saw Monday finishing weak right on the lows of the day. Tuesday open week, finished very strong, closing right at the highs of the day. Wednesday, we tested the upside, making a new multi-day high here, and then sold off and finished right near the lows. Thursday, we gapped up and went up all day, finishing right near the highs. And Friday was really the only day that was pretty quiet, and that tends to be the case right ahead of a long holiday weekend. That also was highlighted by extremely light volume right in front of Memorial Day, so no big surprise there. But a little bit of something for everyone last week, with this market kind of all over the map, but making some net progress to the upside. So really, for the week ahead, there are 2 levels that I'm really watching. The first one is up here for the NASDAQ. It goes up to this unfilled gap, which is right here from 2 Wednesdays ago, I should say. We sold off on that Thursday right there. So the Wednesday close is right in here, and that is at the 22.98 level. So we have yet to fill that gap. That's an unfilled gap right there on the chart. It's been partially filled, but not all the way. The other level I'm watching is the Wednesday close from last week. We did gap up on Thursday. We have yet to fill that gap as well. So Wednesday's close of last week, 21.95. If we essentially break, kind of a multi-day high or low out of the range that we established intraday on Thursday and Friday, we get above the Thursday, Friday highs, I think that we gravitate to that 22.98 level. If we break below the Thursday, Friday lows, then I think we begin to fill this gap right here down to 21.95. Those are my levels for the NASDAQ. For the S&P 500, it's a very similar situation. I'm taking a look at this 1115 level right here, and then I'm taking a look at the 1067 level. Those again are the 2 unfilled gaps for this index, and we've really been carving out some support right in this area here. We've undercut it a couple of times here, but we've been able to rally back and finish above that twice now. So let's see if that can hold, and see if maybe we see a filled gap one way or the other here in the next few days. For the Dow, this is the least important of the bunch. It's only 30 stocks, but it is the index that Main Street is most familiar with. This is the one that people turn on the nightly news and read about. So when the Dow is showing strength, people begin to buy. They get a little bit more confident. When the Dow is showing weakness, people tend to start selling. And this is just Main Street I'm referring to, not professional traders. So it's still worth noting, though. For the Dow, 10,444 is that upper level that we could rally up toward, and then the lower level is going to be right down here. That's at the 99.74 zone. Now, one more thing I want to point out is the VIX. This is a volatility index. And interestingly enough, this thing has been showing a lot of volatility itself. It's been all over the map. We really, in the last several weeks, have run from the teens up, nearly to 50. We didn't quite get there, and we've done everything in between. We've seen big gaps, and again, this is a calculation, so there is no volume here. And in fact, I can just go ahead and pin that off to the side here. and just really focus on price. But in the last few days, we've seen a very large pullback from right up here, the 48 area, down to just under the 30 zone. And it's really started to find some support here around the 30 level. It did begin to turn back up on Friday, so we'll be watching that in the days ahead too to see if volatility does expand from current levels. But it really is an interesting market that we're in right now. It's one where you certainly want to stay on your toes, formulate a trading plan for each day, and really tend to generally shorten those trading time frames, because right now this market has really been unable to commit to much of a direction for more than a few hours at a time. So keep that in mind. That is going to change at some point, but in recent days that's how it's been. We need to wait and see when it changes before we alter our approach to that. So thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.